Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, so we talked yesterday in the morning webcast. We talked during the midday. Look, if you want the midday video and if you want the end of the day video, you've got to subscribe. You got to follow over at Twitter at Princeton Trader. You got to get us over at Instagram at Princeton Trader, Facebook too. That stuff only goes up over social. It doesn't go up on YouTube. The morning videos go on YouTube. The other stuff is on social because we want it to be immediate, okay, and accessible. So where do we stand? We talked about that Europe high from Sunday night, which was in the 56s. That lasted till about 9:31 yesterday. They ramped it up right off the open. They did 64.75. Then the bears fight back. They fight back. They take it down as low as 55.75, but they really can't find their car keys in that 58, 59 area, and they end up, giving it right back up, going up and doing 65. And depending on your perspective, I mean, that could be termed to be, matching highs. It's going to depend completely on how today plays out. Secondary band ride was the other thing that we talked about. And just for anybody that missed it, we do a band ride, we take a break, we go back and we engage this band. Now, the good news if you're a bear is they didn't automatically engage the band at 6 o'clock last night. You had enough of a down push into the close that held through the overnight session that the bulls have got their work cut out for them. I think they've got to print in the 70s if they're going to engage that band. And the reason I say that, well, you say, well, Mike, it's at 68.38. What the hell are you talking about? Well, in order to engage the band is a moving target. It's ever expanding. If you're going to hit the band, you got to overshoot where it happens to be right now when price is at, say, 57.75. It's going to take 70 or better to hit the band. Now, if they hit the band, what happens next? Well, we've seen in the past when it hits the band, it basically is a catalyst for a fairly nasty short squeeze, and I think you get to 2,400 pretty quick. Now, at the same time, we're still in a very low volatility environment. I'm putting an interesting stat up in the daily report today. It was all over Twitter yesterday. I'm not reinventing the wheel here. It's been 45 days, 45 sessions, I should say. So think about that. 45 sessions since we've had a 1% intraday move. Okay? So everybody's freaking out about the tape and, I can't trade this tape. I can't do that. You know what? Nobody can. It's a very difficult tape to trade. It's not you. It's the tape. This tape is a pain to try to trade. Unless you blind bought the open yesterday, that was a very hard move up to catch. And unless you were throwing darts at highs, that was a very tough down move to 55 to catch. And personally, I don't trade that way because if you're wrong, then you are the squeeze. And if you start blind buying opens, you're going to be the high. So, it's a treacherous tape to trade. So what is the task that is before both sides today? All right. If you're the bulls, you got to get over 70. You got to at least put that band ride technically on and then see if you can do something with it. If you're the bears, let's go to the hourly chart real quick. Okay. Hourly chart. If you're the bears, you got to hold our favorite line, right? Hourly midband. That's where they blasted. Here, there's your open yesterday. Hourly midband, off we go. Okay? Now, broke through it in the overnight like it wasn't even there. Okay? So it's not the end-all, be-all of trading existence. Okay? But you have to pay attention to it. They tried to get back over it, early this morning, couldn't do it. I would expect a retest off the open. So we're dipping here. I am assuming that this dip is a buy because the vast majority of dips are buys, and if you treat the vast majority of dips as buys and you pay attention to risk, it's going to keep you on the correct side of the trade more often than not. Okay? Now, if the bears can hold the blue line here, if they can make a lower low, they've got to get below this week's low down at 49 even. Okay? 49.50 has been support this week. Below that, then you get to the 800-pound gorilla in the room as far as support goes. This is major support down here. You've got weekly pivot at 37.60. You've got 36.5 and 36.75 here and here from last Thursday, Friday. 36.37 is going to be a real pain to get through. I would fully expect that on a first test of that area, that it would be a nice little dip to buy. Maybe not for some type of a V back to new highs, although that's always possible. But it's a nice dip to buy for some kind of a bounce rally if it gets down there. So keep that in mind. So first task for the Bears, hold 59.80, break 49, go see 37. If you're the Bulls, look, come in, buy that dip, get over 70, and squeeze them up. All right, everybody have a fantastic day. Catch you at the mid-morning video. Follow us on Twitter at Princetontrader. Come check out our website, Princetontrader.com, and come take a free trial in our chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.